Another all-time high on the S&P 500. Uranium push continues to move higher. NVDA makes an investment in OpenAI, taking their stock to an all-time high close. And why this looks great, and we are watching the breadth of the McClellan summation roll over, which I do think is important to note, is this something we have to concern ourselves with? And I think the answer is yes, but I think there's more going on under the hood here, and we're going to dive right into it. As always, subscribe to this channel, click all notifications. I do put out notes during the day in community tabs about what's going on intraday, and you do not see those notes unless you are subscribed. Let's get to it. Now, in front of you is the last hour, and if you've been following this channel for some time, you have seen me show this chart before. For those that are new, let me explain what you're looking at. Now, I did not create this. This is created by Sentiment Trader. I have no affiliation with them. I've asked them in the past if it's okay if I use their information, and they're fine with it. The last hour indicator is cumulative. This is super important to get. It's a cumulative number of the AD line for the last hour of trading for the SPY ETF. AD line is advanced decline line. Advance is divided by declines. Value is 1 added to the advanced decline line. So as it is in your favor, it's plus or 0, minus 1, plus 1, minus 1. That's it. If down, value of 1 is subtracted from the count. So that's all you can get, plus 1, minus 1. It's the AD line for the last hour of trading in the SPY ETF. This model, the trend model, applies moving average to the advanced decline, and you look for instances. I don't do that, but that's how they want you to use it. The most important thing about data is when you understand what the data is, then you can do whatever you want with the data. Just because you want to use a moving average doesn't mean that I need to use a moving average. I use it completely different, and I use it as relativism to where we are in the food chain, and I will explain. And when I look at the last hour, obviously there's the title, and the black is the S&P right here. Can't miss it. And all we really want to do is just understand that we're looking at for correlation. So you can see where we're at right now, and you can see where we've been in the past. And what's most interesting to me is the relative performance. So you have this area in the past that has really been a bottom of an area, and that has been right along this area right here. And cumulatively, when you get there, we have seen a bottom in the market, meaning if we get to this area on the last hour, that is usually where the cumulative starts putting in some kind of bottom, and we've seen this, and you can see it for yourselves very clearly. It doesn't mean that you're automatically just going to bounce because of it, but I look at this from a relative standpoint and an absolute standpoint. So for whatever reason, when this indicator gets to that 535 level, we start getting to that point where we're putting a bottom in. I also think that you should be looking for higher highs with this because it shows from a cumulative standpoint the last hour and how they keep buying. Meaning if you keep getting plus 1 over and over again as they overlap, you're going to go higher because they're buying more as we're pushing up. So what this means for someone like us, and what we're always focused on with this kind of stuff, is how do we profit from it? Well, if we were at this level right here, which is right around that August level, you're going to see more like that July level. You're going to see that you've broken out here. Now that breakout, if we look, is commensurate with what's happening in the market. It's not really that hard to say. What I think is most important about this is it takes us to a level that is commensurate with where we are. In other words, they are cumulatively buying on the institutional side at the end of the day. Now, if I took a look from this level, which we've clearly broken, and just to kind of get a performance level there, if we drop this over, you'll see that this was an area of contention in the past. And that area, we tried to fight it here, bounced over it and lifted. And then this area right in here, what happened in that area? Well, I think it's kind of important. You did a test of a lower low, and then you continued to rally. And then we can obviously see the fall on the last hour and how they started getting out of the market. And when they bottom in here at that level again, what happens? Well, we start to put that bottom in. But when they're getting out into the last hour, it's just a matter of months, usually months, before you see some kind of drop. You can see it here, and then you wind up having some kind of peak over here. And that's because the institutions take their time in selling. And this always ties into smart money, dumb money, where retail can't get out fast enough. Institutions take their time. They're in no hurry to move. They take their sweet time in everything that they do. But what is this really telling us? Well, it's telling us that this move is in line with what we're seeing. Now, if we zoom out, and I did want to try to cover some of this in the Saturday's video, which I will link at the end of this because some of this ties directly into it, but there was just way too much in Saturday's video, and I had to cut that back as well. But I will link Saturdays at the end of this, and if you have the time, I would certainly watch that. It's packed. And it will explain why some of the things happened today, actually, especially with uranium. If you're looking right here, that's a clean breakout. That breakout means that this is commensurate with what we're saying. This is exactly what you're looking for. And if you look over here from where you were in January, you're actually higher. And so when we come over to these levels that we're at, like in January or anywhere in these areas, like watch, we'll pin this over here and we'll come across. And what we'll note very clearly that, yeah, we broke out, but the advanced decline buying at the end of the last hour is commensurate with that move. So when we're talking about this, are they buying? Are institutions buying? What does the breadth look like? This answers those questions. Now, if we zoom in and just look year to date, it gets very easy to see. So, and this is important, and I'll explain why, because we go through all these indicators, and I like my indicators. I like looking at the breadth of the market. I like understanding the breadth, but I also want to know who's involved. So if I come across here and drop my line down from those highs in January, and I see clearly that we have more advanced decline buying in the last hour now than we've historically had, well, that's exactly what I'm looking for. And you had this huge jump, probably the largest jump that you've had in this indicator, if we take a look at this, all year in this range. And why did that change? Well, it changed on September 1st. That date right here, September 1st. Well, what took place there? A lot took place there. And obviously we have the Fed movement and we've seen the non-farm payrolls come out and some changes there. And that led us to believe that the equity risk premium was going to come in. I will get into equity risk premium this week and why the market's doing what it's doing. But what should you take from this? You should take that as you're grinding higher, institutions, no matter what we think about the other indicators, institutions in the last hour here are buying more broadly than they are selling. Hands down. And that does give us some support to the market, which means if we see pullbacks that are non-news related, and I have to put that out there considering the amount of news that we have, they're probably going to be pretty shallow because we have depth of book, as I like to refer to it. So you guys are always welcome to comment on this. I got asked to cover this, and it's one of the reasons why I did, but I do think it is very timely. And I certainly like when it matches exactly with what the market's doing. And this usually does lead to further pushes. Now, just because the breadth of the market is strong across the board doesn't mean that you're not going to have bouts of overbought and oversold. And I'm going to give you an example of this. And I think this is super important. We have some news we really have to cover as well. But this was a great trade today. You're rallying up and then you just start pushing. Half the market's falling down and cracking. So whenever you see half the market falling down and cracking, you're always looking for the ones with the most volume that cannot get below the open. And this could not get below the opening price. It's super simple. All you're doing is marking off that open as it trades in your favor. You're scaling out into it and you're trying to hold on to that runner for as long as you can. This was pretty classic us as far as trading in the community. You can see the higher high and then you can see the divergence right here telling you it's time to get out. You can always give it more time if you want and make sure that you break that, that kind of tree level right there. You can see the higher highs and then all of a sudden you kind of break your little, wonky tree right there if you say it. And then from there, that was pretty much it. But this was pretty much an indication that you had an issue up in here. So you're able to pull money out into here. And I think this is, again, really important, guys. Look where you came. You came right back down to here today. And you saw a bunch of names doing this. It was not one name that did this. But this presents an actually great opportunity for people that want to focus on the short-term trading while what's going on out there. There's this long-term thesis. But let's take a look at this really quick trade. And then what we'll do is we'll start getting in longer-term things that I think are super important. It's a big level for Tesla. If we can get through. It looks like you're going to get through. You're not below the open. I bought it. I'm going to know in a second here if I'm right or wrong. Up $1. Trimmed. That was fast. To the open. It's early, so this stuff could all reverse on me super quick. So I'm just watching, seeing what it's going to do. Nothing for me to do now. Thank you very much. I can just use that 32.67 on the rest and just hold it now. Tesla, nothing for me to do. Like literally nothing to do. Just keep winning. 37, trimmed up 5, trimmed up 7. Nothing for me to do with the rest of the Tesla. Yeah, nailed it. Up 10. Still buying. Still selling calls too. It was on the 450. Actually getting more buying in here. 450 is my level on Tesla. Well, I'll just probably kick the rest. I moved the step up to 440. I'm not doing anything with it. So for some time, I've been referring to this market as feast or famine, and most people are used to like a rising tide. And I do not believe that you're in a rising tide. I do believe that you're in a feast and famine kind of market. To me, this is super important for people to get. NVDA at 100 billion, OpenAI bets lift stock, fresh record highs, ongoing Fed debate. Well, I'm not worried about the Fed debate, but what I think is important here is that if we take a look at this, NVIDIA is going out there and going to invest $100 billion in OpenAI. And frankly, they're doing it through their chips. And they're going to do it over probably years, the way that this is set up. Tesla obviously is upset by it. Elon's calling foul and saying, well, how can you do this? It's unfair. Wow. It doesn't matter that it's unfair. They can 100% do whatever they want with their own product. And if they want to find a way to take an equity stake in a company, they can do it. You start getting into antitrust, and is that going to be an issue? That's probably not even on this administration's radar. But this is going to benefit Oracle greatly, OpenAI greatly, and NVIDIA greatly. And all of those names moved based upon this. I do think that you might get some people feeling some kind of way about this, going, well, do we really want to buy NVIDIA chips if you're going to support OpenAI? What about this model or that model? Who else's chips are you going to buy? And don't say AMD. Like, where else are you going to go? Nowhere. And quite frankly, you're getting to the point with NVIDIA to make these models, they're going to need to partner with somebody. It's just a matter of time. And it seems like this is the way that they're going with it. Does this develop scrutiny? I don't know. I don't have an answer to that, but let's take a look at what the stocks did. To be clear, NVIDIA hit all-time highs on this. So this news hits, NVIDIA rocks and rolls. Elon goes out there and starts crying. Nobody really cares that Elon's crying. But you can just see what the market did. Look at the volume on this. This is significant. It really is, because you look at NVIDIA and say, well, how does this work? They have every right to do this. And I understand that if you're Grok and you're buying the chips and you realize that now you're going to be supporting a competitor in a way, yeah, it's a problem. It is what it is, but there's not really a whole heck of a lot you're going to be able to do about it. And I don't know that it's anti-competitive, but that's not really my wheelhouse. My wheelhouse is trading numbers and letters and trying to profit from it, either up or down, right? That's really my wheelhouse. So I'll stay in my lane. If I think about it, it makes a ton of sense. And this is one of the reasons why also with Oracle, a lot of people are out here, and this is what I always say to people, you're out here reading a story and you're paying attention to one part of it. I'm going to clean this off. So when Oracle came out and said, we have this contract's $300 billion. Well, where are they going to get the $300 billion? OpenAI, and the contract doesn't even start to 2027, and everyone's trying to figure out where they're going to get the money by Tuesday, and they don't even have a first payment until 18 months. Well, here's $100 billion coming in. And Oracle has a very close relationship with NVIDIA, very close. So now we have Oracle benefiting greatly. We have NVIDIA benefiting greatly. And here's what we have. We're starting to see who the real winners are going to be of this, like who's actually going to win. And it looks like it's Oracle. Now, Oracle is also up on the TikTok news. I am going over Oracle for a reason, because I just want to show you something that I think is super important out there. If you watch these videos, I am a pattern trader, and that means that I look for pattern identification during very specific times. I look at seeing how they react, because stocks have personalities, but so do time frames. And here's a great example. Oracle, we see how we had the earnings, and then all of a sudden we're down. There's your first higher high, and then we lift and we push. It really does not matter what the name is. We had great earnings. We broke out. We started to test those lows again. We finally made that higher high, and we're starting to push. Again, here's the same thing. We have earnings. We go sideways. We retest those levels, higher high, and from there, we continue to push. That pattern, that recognition of that pattern, that is what's happening in the market right now after earnings. 2 quarters ago, it was the 2-day step, meaning that if you came out with earnings, you didn't move, and then the second day you started to move. You're always looking for these patterns, because they do change up their patterns based upon how they're balancing their books, especially on the equity side. There's no doubt about it. I mean, you should be able to see this pretty clearly. You have these tests, you start making these higher highs. You want to pay attention to that. What we were seeing here really was this was about 2 quarters ago, where you start seeing the 2-a-days where you take a day where they would sell you down and then you just start grinding higher. The reason I have up Meta is because when this news hit, you saw Meta completely implode. And do I think that Meta should have imploded on the news? I don't think it's great for Meta, no. But Meta was up here in the 780s, and by the end of the day, you're down here at 766. Again, I don't think that this is going to be a rising tide lifts all boats. I think it's going to be feast or famine. Somebody's going to win, someone's going to lose. Now, if I look at Meta on a 4-hour chart, I mean, I can think of things that have looked worse, but this looks pretty bad right now. So we're getting back up into this area and we're rolling back over. You tried to lift, they completely kiboshed you here, and you're breaking through this 3-bar pattern on the way down. I also think that you're going to see some of these names come in a little harder than normal, meaning some of these names that you're used to continuing to see rise, They're just not going to do that. They're going to not be the leaders that they once were. And what that means is you're going to find new ones. Now, at the same time, we're seeing a lot of movement with OKLO and some of these other names. And again, I've been real clear that this is something that we've been in for a very short period of time, and we already have a double on it. I look at something like this, and yeah, it is frothy. Yes, there are no revenues. They're breaking ground now, and do people care about that? I don't know. You can either be a valuation expert or you can be a trader, right? It's up to you to figure out which hat you want to wear. The hat that I like to wear is P&L. That seems to work best for me. So all I know about something like this is when it ends, it's probably going to be pretty darn ugly. But I've learned over time that I'm better off making these smaller bets on when it's going to end versus making a full commitment on when it's going to end. And I think something like this OKLO, if you really look at the headlines and what's going on out there, you're seeing these big moves in the entire space. It didn't slow down today. So if we were to look at this and we clean off the SMR and we start looking at these things, did these slow down at all? They really didn't. So are you seeing weakness? Or are you still seeing inflows in here? So instead of standing in front of it and saying, I'll stop the water and get drowned, just let it settle down. I think that's super important. Other things that I'm seeing are these secondary names are really starting to move. The NBISs of the world, they're starting to lift. The IRENs, they came in and doubled their capacity on the Blackwell side today. So secondary moves are definitely out there. I showed you a graph on Saturday and specifically about stock correlation. And I think that is very important for people to get. And I don't think that they fully grasp it. Now, right here, I'm going to leave a section where you can look at how we do some of these swing trades. You can click that one link and I'll show you how we do some of these swing trades. I walk through them step by step. The other link will take you to Saturday's video, which will explain this graph in better detail. The important thing about this graph to take from it, if you don't have the time to watch Saturday's video, but I would suggest that you do, even on double speed. The 3-month realized correlation, average correlation right here, this is going back over 10 years. It's telling you how highly you're correlated to the market or how low your correlation is to the market. And obviously in April, when we had all that winning and liberation, everything was like super correlated. And now we're at like multi-year lows of correlation. So stock selection matters more than ever before. I'll say it again. We're not in a rising tide. We're in more of a feast and famine. That is it.